governments are out there trying to gaslight you into believing that meat is actually bad for you. Meat is going to destroy the planet because cow farts are going to burn the earth or something or the other. And meat is also going to destroy you because apparently all your ancestors were wrong to eat meat. They should have been eating, industrial canola, seed oils. But for me, it's very transparent how ridiculous these ideas are from the perspective of nutrition science. And I think you can only understand the very, very strong concerted effort to try and popularize those ideas by looking at the funding of those ideas in universities. And the funding comes from the people who benefit from the inflation. Essentially, governments are financing these curricula to tell people to continue to enjoy eating garbage. And that's how you hide the inflation. So I think you can't understand the enormous destruction of health that has happened over the last 50 years without reference to the collapse of the modern diet.
Welcome to the Rose Show podcast. Welcome to the Rose Show, where we help you build and preserve your wealth. Today, I'm here with Saifedean Ammous. He is a world-renowned economist and author of 3 amazing books: The Bitcoin Standard, The Fiat Standard, and Principle of Economics. He also has amazing courses on his website. He has a podcast. He's CEO and founder of Saifedean.com. And he's also recently been appointed as economic advisor to El Salvador Bitcoin office. And as you all know, they're the first country to adopt Bitcoin as legal tender. So how you doing today?
I'm doing very well. Thank you so much for having me.
Absolutely. Thank you so much for being here. Well, I'd like to begin with your background. And we can start with how you became interested in economics, mainly the Austrian school of thought.
Well, I was doing a PhD in regular economics, mainstream economics at Columbia University between 2004 and 2009, 10, until I was completely done. Well, 11 maybe. But anyways, I was studying mainstream economics, and you keep studying and learning, and you keep thinking that, eventually you're going to study enough that this stuff is going to make sense. But then it never really made sense. And then, 2008 and the global financial crisis happened, and none of the things that were happening around me made any sense, given the things that we were being taught in our university textbooks. And so I started coming across alternative explanations. And that was basically the Austrian school, came across the Mises blog, came across all kinds of very interesting, very revealing information, which I found to be enormously useful. And it's helped me understand the world a lot better. And I would say helped me live a lot better over the last, it's been 15 years now.
Very nice. So what would you say are the main influences and sources that shaped your economic worldview?
I'd say it's the work of Murray Rothbard and Ludwig von Mises, these 2 economists primarily. Hayek as well, but Rothbard probably most of all, because I read more of him, because he's more contemporaneous. He writes in a language that is closer to our language. So he died in the 1990s. So he was somebody from New York in the 1990s. So his English is more approachable for people like us. And the context in which he was writing is more understandable for people in our generation. So, and of course, it's an absolutely mind-blowing intellect and writer. So I've learned the most, I would say, from Rothbard. It's been absolutely instrumental in shaping my worldview. And he's extremely good at writing, extremely good at communicating complex ideas. And he's extremely productive. I haven't read maybe 10% of his life's work because he's produced so much work. It's just astonishing.
Wow. Well, Dr. Ammous, I have to say, I think you're becoming also a great thinker in the field of the Austrian School of Economics with this amazing book, The Bitcoin Standard, which everyone refers to as the main book of thinking when we talk about, hard money and fiat currency, and we compare them, and we will be comparing them today in our show. I want to ask you how you came to Bitcoin. How did you find Bitcoin, and how long have you been in Bitcoin?
I honestly, sadly, don't have a good answer to this question of how I first came across Bitcoin, because I first heard about Bitcoin early enough because, I was into hard money, gold, and Austrian economics circles on the internet. So I'd read these blogs, and I remember I don't remember when I first came across the mention of Bitcoin, but I remember coming across it several times and not quite knowing what was going on for the first few times, and then quickly forming a tragically dismissive opinion of just, oh, well, obviously this won't work. And that was basically me for the first few years of me hearing about Bitcoin. Like, yeah, this thing is going to go away, and obviously it's not going to work, without having taken the time to look into it. It was only really in 2013, 2014 that I started to think, wow, this is quite interesting. It's not going away, and it has staying power. That's when I started really looking into it closely. And then in 2017 is when I started writing my book, The Bitcoin Standard, and then it was published in 2018. So that's, I would say, really, I got into Bitcoin properly in 2016. 13, 14, 15, I was getting to know it more. I was still learning about it, but I think I became truly convicted in 2016, 17.
Wow. Well, thank you so much for that. So it's been quite some time, and your book is definitely the standard for Bitcoiners and for just, sharing that concept of hard money, which is so important to understand the importance of having money that is scarce and is hard. So let's begin with Principles of Economics. That's your most recent book, and that explains the most important economic concepts. And through the Austrian School of Economics, you talk about, and in economics, it's always important: scarcity, opportunity costs, cost, supply and demand, production, consumption, trade, and so forth, labor, and then value, law, diminishing return, marginal utility, and all of those. But I want to talk about time. Time is the ultimate resource that humans have to economize, and time preference, most importantly, I think it's the most important and useful concept in economics, and that's the degree to which people prefer present satisfaction over future satisfaction. And you make excellent points how you compare the hard money with fiat money, how they have vastly different time preferences, lower versus higher. Could you please tell us all about that and its relation to interest rates, savings, investments, and capital accumulation with fiat money economy versus hard money economy?
All right, you're basically asking me to summarize about 2 of my 3 books.
Excellent points, though. Excellent.
I know. I like a challenge, so I'm going to go ahead and try
Keep
and
it
do
simple.
just that.
Keep it
Yeah,
simple.
I'll try. So I'll say probably like an original contribution that I'm making in economics here is to try and present the degree of time preference that individuals have as being a function of the hardness of their money. And I'm not seeing that stated explicitly in these terms before. But I think there's pretty strong, compelling analytical understanding that allows us to accept this viewpoint. And I would say, if you look around, you see empirical evidence also suggests it's true and a very strong relationship. And the basic idea here is that what distinguishes us as human beings from animals is our ability to lower our time preference. In other words, to not discard the future completely, to provide for the future, to prioritize the future more and more, increasingly provide for it and think about it. And so once human beings get down that path of sacrificing in the present in order to provide for the future, they develop this thing we call civilization. This is really the process of civilization. Is when we give up on the idea of we want to satisfy our wants and our desires immediately, like animals, where you get the urge to eat, so you just attack and eat whatever is edible in front of you. You get over that and you start thinking rationally, and you think, I'm going to subdue my inner instinct right now because I want to provide for myself for the future. So the best way for me to eat is not to go around hunting for something to eat right now, but to build a spear, because then I'll be able to catch more animals with a less amount of time invested. And so that ability to sacrifice in the present, give up on catching animals so that you can build a spear, that's what sets in motion the process of capital accumulation. That's what sets in motion the process of increase in productivity, because what capital does to us is that it increases our productivity. And so more capital accumulation leads to higher productivity, leads to better living standards. That's the process of civilization. And it all starts from the lowering of time preference. It all starts from sacrificing today for the benefit of tomorrow. And so I think that one very essential technology that we have for lowering our time preference, I'd say instrumental to our time preference, is the quality of our money. Money itself is the most effective way that we have for providing for the future. So you can save actual economic goods for the future. That's one way to do it. But money is a much more efficient way of doing it, because money contains a lot of value in a small amount of volume. It's very easy to maintain. It's not expensive to carry. It doesn't require massive amounts of storage. And it is the most liquid good. That's really the most important thing. So you save in money because you don't know what you're going to be needing exactly in a year from now. And so you just save in money so that then you're able to get rid of the money when you need to, and you're able to exchange it for whatever it is that you need. It's the most liquid good. So once we invent money, the future becomes more attainable for us. It becomes less uncertain, less hazy. And so we can provide more for it. So we start thinking more for it, more of it, and we start providing more for it and sacrificing more in the present. So the better our money is, the more it's going to lower our time preference, the more it's going to make us civilized, the more it's going to make us future oriented. And then you see the exact process unfolding historically. As humanity has lowered our time preference, as we become more advanced, more productive, accumulated more capital, lowered the interest rates, because from the Austrian perspective, interest rates are a reflection of time preference. So we see historically interest rates are dropping because we're becoming more low time preference. We're becoming better at providing for the future. So we save more, we accumulate more capital. So historically, we see this as a 5,000-year process of human civilization advancing as we lower our time preference and as we lower our interest rates and as we accumulate more and more capital and increase our productivity. And we see the reverse happen when you look at a society that's going through hyperinflation. You look at a country where hyperinflation is happening and nobody can save. Nobody thinks of the future. Nobody thinks of providing anything for their future. Everybody is essentially fixated on surviving between today and tomorrow and the next week and the next month. That's it. And so you get paid and you take your money and run straight to the supermarket and cash and spend all of your money for actual goods that can last you for the month, because if you wait until the end of the month, the price of everything is going to be lower and lower and lower. So the whole thing begins to unravel. You see the exact opposite. When the money is destroyed, our ability to provide for the future is compromised. So the future becomes more and more uncertain. So you don't know if you're going to be able to make it 10 years from now. So you have very little reason to sacrifice things that you have today for the sake of tomorrow. And you see this reflected across all aspects of life. You see it, people become less civil, people become more violent, people become more likely to engage in crime, people become more likely to engage in dangerous behavior. All of these things reflect essentially the raising of time preference, because the future becomes more and more uncertain. And so for me, what's really fascinating is that you look at history up until the early 20th century, we see that we are lowering our time preference and our money gets harder. Then in the 20th century, we see The money gets easier because governments take over the money and they keep printing more and more and more of the money, and the money supply keeps increasing. And that causes our time preference to rise. We get higher inflation. And also we see that people become more and more present oriented. People start saving less. People start becoming more prone to conflict. We see more and more bad things happen. We see essentially a culture that is high time preference. You look around you, even you see it in the music and the arts, everything is quick. Everything is fast, easy to produce. Very little is being produced through long-term projects that require real sacrifice. And I think what's really interesting to cap it all off is that we see this with Bitcoin now. We see the people who get into Bitcoin, they have a form of money that is hard, and that money is appreciating over time. And so you witness the opposite. You witness the opposite process take place, where these people are having their time preference lowered again. They're becoming more and more future oriented.
Excellent points. Great overview of somewhat simplifying this very complex thinking. You mentioned cognitive distance, that space between the impulse and our reaction. And we are humans. We should sacrifice for the future. It seems that Keynesian economics, as well as the fiat money, has incentivized short-term while discouraged long-term. And, we just seem to live for today. And I love when you say, I think it's from your book as well, the quality of money affects the quality of a civilization. And that's very important to understand that concept. And it seems the philosophy of Bitcoin in the idea of time preference is that Bitcoin and fiat are like two polar opposites. And Bitcoin actually reduces your time preference, enables you to look long-term and save for the future. So what does our current monetary system say about us? I think you said it, but let's just simplify it. What is it saying about us and our society overall?
Not nice things. If I were to give you the executive summary, it does not say nice things. So in my second book, in the Fiat Standard, I try and look at the way that the fiat monetary system works from scratch, just study it from scratch, in the same way that in the Bitcoin Standard, I looked at Bitcoin and how Bitcoin works, and I analyzed the implications of the way that it works and the economics of it. So I did the same thing with the fiat system. And, Bitcoin really helps you see fiat according to its real nature, because you can get to see it by referencing, again, by comparing it to Bitcoin. You get to compare it to the basic bare-bone building blocks of what constitutes a monetary system, so that you could compare the two and see how fiat actually works. And one very interesting point that I understood about how fiat works is, if you wanted to think about how fiat comes into existence, well, we know how Bitcoin comes into existence through the process of mining. We know with gold, it's the same thing. You mine gold, and so you make gold. Well, how does it happen in the case of fiat? There's no fiat mine where you're actually mining new fiat, and it's not printing money. The vast majority of fiat money is not printed. It's only about 5% or so that's actually out there in physical form. And the majority of money is actually in digital form. So how does it come into existence? Who mines it? And the answer to that is that it is mined through the process of lending. Anytime a bank that is connected to the central bank and operated in accordance with the rules of the central bank, every time an entity, a financial institution essentially, that operates under the auspices of the central bank issues a loan, it is effectively creating new money. It is mining new fiat. So when you see it this way, you can see very clearly why this kind of operating system is going to have very profound impact on the way that humans behave. And you see it everywhere around us. Everybody's in debt. That's why everybody is in debt, whether it's individuals, whether it's businesses, private businesses, or if it's governments, local level up to the national level. Everybody's up to their eyeballs in debt. And when you understand that debt is fiat mining, then that makes sense. If you're not getting into debt, then every time somebody else gets into debt, they're making new dollars and they're devaluing your dollars. That's how new dollars are made. And so if you don't get into debt, you just get to suffer the inflation caused by everybody else's debt. But if you do get into debt yourself, you're allowing a bank to make new money. And so that's a very good deal for them. So they're going to cut you in on it. And that's why it makes sense for you to get in on it. And that's why everybody needs to get in on debt. Everybody needs to borrow. And because ultimately, if you don't, you are suffering from inflation. Whereas if you're borrowing, then you are short the currency. You have a negative position in the currency. You've got liabilities in the currency. And so as inflation takes its toll, what happens is that your liabilities become smaller. You have to pay less and less for your liabilities over time rather than paying more. So the smart thing to do under the fiat system is not to save. All of the wisdom of humanity for many centuries about, save for the day, for a rainy day, worry about the future, prepare for the future. All of that goes out the window. This is a losing move under the fiat system, because if you think for the long term and if you save your money for tomorrow, you are just donating your wealth to the government and the banks that are printing new money and benefiting from that inflation. So the smart thing for you to do instead, therefore, is to get into debt. And so that encourages everybody to be more debt based in all of their operations. And that makes everybody more fragile, because you can't just buy savings and hold your savings and expect to be safe financially relatively from this. You are in trouble if you hold your savings, because the inflation has taken its toll. And so you can't hold savings, so you hold debt, which is good because it protects you from inflation, but now you're vulnerable because at any point in time, you miss a couple of debt payments and then you could lose your collateral, you could lose your business, you could lose your house, you could lose all kinds of things. So everybody becomes more uncertain about the future. Everything is up in the air, everything is stressful, and everything is day to day. It's how do we survive from day to day rather than becoming more and more long term. And I think this explains a lot about the way that people function in modern society, that you can see that people are generally stressed and they're very short-termist, very high impulse, because they don't have a very solid way of providing for the future, of thinking of the future. And so they are constantly fidgeting, essentially, and being very short-termist about what to do.
Excellent points. We're like all living for today. I mean, it's Fiat Standard. The fiat currency is all about debt. And in your book, you talk about how there's government spending. We're all part of the economic slavery, and it's ultimately unsustainable. And I think before we get into the philosophy of money and understand money and understand this fiat standard, I think what we need to go into is the Keynesian economics and compare it with the Austrian and how they're vastly different. And I love when you, in your book, Principle of Economics, how you mention Keynesian is what creates more debt, how it is actually for government spending. And it says that demand is what stimulates the economy. Government spending stimulates the economy, but it actually doesn't. It's more of a parasite, and it robs us from our future. Could you please compare the Keynesian and Austrian so we can understand what our society is actually based on before we even get to the money?
Yeah, I think the main difference between the two, if I were to give you the kind of very blunt opinion, is that Austrian economics is just economics as it had existed for the vast majority of human history up until the 20th century, the early 20th century. And that is the attempt to try and understand how people make decisions about scarce things, how people economize. And then what we are taught at universities is an invention of the 20th century, which came about and really changed the question of economics drastically, from the question being it is about what, trying to understand how humans act under scarcity, to how do we help the government improve the situation of the economy for people. So we move away from understanding and analyzing the world as it is to policy relevant conclusions. We need to give actionable policy advice. So that becomes the job of the economist. So on the one hand, the questions that Keynesian economics and modern economics asks are rigged to arrive at the conclusion that the government needs to do this, because they only ask the question of what should the government do. So it's from the get-go, it starts off with the idea that we are here to figure out how to make the government run the economy better. The economy is something for the government to manage, and the government can manage it properly. And the government, needs to hire the best economists that know how to manage those things. And then if you do that, then you get then this works. So that's basically the perspective from the Keynesian viewpoint. And the reality of the matter is, the kind of very blunt answer that I would give is that it has two roles. On the one hand, it's let's provide policy relevant advice, but I think the more important role that it plays is let's manufacture consent for central banking and for the current situation of the way in which we run the banking system.
So, Dr. Ammous, do you believe that Keynesian economics is the reason we are where we are today, and it provides justification for government intervention and control over the economy and society?
Yeah, pretty much. I mean, I think ultimately, as I was just saying, it's out there to manufacture consent for central banking and for the idea that it's necessary for a monopoly agency owned by the banks themselves to regulate the banks and the money supply, which I think is, if you think about it, it's a completely disastrous idea. I mean, just try and imagine it for anything else. Imagine if we decided that in order for us to have potatoes, we need to have the Potato Growers Association approve the application of anybody who wants to make potatoes. And so you're assigning a monopoly body that has the job of deciding what gets to be potato and what does not get to be potato, and who gets to produce potato and who doesn't. And so, of course, they're going to rig that game in their favor. You're not going to just let everybody get in on the potato market, because the more you limit entrance on the potato market, the more of a monopoly you have, the higher you can charge in terms of prices. So I think the economics that we learn at university is funded by central banks. It's published in journals that are financed by central banks. The professors themselves get published through central banks and get funded by central banks. And the whole thing is to justify the idea of central banking. So it's not a surprise that they arrive at conclusions that are always flattering to central banks, finding ways for central banks to do things, and finding that all the bad things that happen did not happen because of the central bank, and that they could all be fixed by just giving more power to central banks.
Well said. Well, that's why we're here today, is to spread the truth and awareness and hoping that everyone can achieve freedom. So let's break away from this conditioning. And Dr. Ammous, please tell us, what is money?
Money is just another economic good. There are a lot of economic goods out there, and money is another one of those economic goods. There are a lot of very sophisticated ways of explaining money and how money functions and what it really serves. But ultimately, it's important to understand that it's just an economic good. And the function of that economic good is that it is a medium of exchange. Money is defined as a good that you do not purchase for the sake of holding it for any kind of utility that you get from it itself, but it's something that you hold with a purpose of exchanging it for something else later down the line. That's what distinguishes between it and consumer goods and capital goods. So consumer goods, you hold them because you want to hold them. So you want to buy a TV or a washing machine or a shoe or food items because you want to consume them. You value them themselves. Capital goods, you buy them in order to produce consumer goods. So you buy a machine that makes you consumer goods. But monetary goods are goods that you buy not to produce things from, and not because you want to consume those goods, not because you get any utility or satisfaction from holding them themselves. You know, you don't, it's not like artwork that you buy because you like to look at. It's something that you buy with the express purpose of later on exchanging it for something else. So it's the good that you buy in order to exchange it for everything else. And that's a market good that emerges at any point in time. At any society that becomes more complex than a handful of people using a handful of goods, it inevitably becomes the case that some goods are more useful for exchange than others. So if you live in an economy of 20 goods, one of those goods is going to be more suited for exchange than others because of its various physical or primarily physical or economic properties. And so because that good is more useful for exchange, more people are going to start using it for exchange. And so they're going to develop cash balances in it. They're going to hold onto it with the express purpose of later on exchanging it for something else. And so they'll start buying it more than they would buy it as a good. So, you know, think about an economy of 20 things. And then in that one particular economy, you know, people realize that precious stones are, you know, the thing that works best as money. And so the demand for precious stones goes up significantly more than the demand for precious stones for jewelry or for decoration. People start buying them for the sake of exchanging them later, not because they want to use them as decoration, but because they want to use them as money, effectively. And so the demand for a good to serve the function as money emerges on the market because it meets a need of the market, which is how do we make transactions happen efficiently. Just naturally, some goods are going to be better at doing this, and people who use the more saleable goods, the more marketable goods, the goods that are better at performing the function of medium of exchange, are going to benefit from that, as opposed to the people who will use bad media of exchange and bad monetary assets. So the people who will use the bad monetary assets and the bad media of exchange will witness their wealth dissipate over time, whereas the people who use the good media of exchange will witness their wealth appreciate over time. And so over time, that is a process that leads to the concentration of the monetary role happening in one or a very small number of goods. It's a winner-take-all market because the bigger the amount of liquidity that exists in a form of money, the better it is at money. And so there's no reason for anybody to want to hold the second best money. Everybody wants to hold the best money. And the more you hold into the best money, the better it becomes. So that process leads us towards the centralization of money in one or two forms of money. And that's essentially the Austrian perspective on money. And what's so outlandish about it, what makes the Austrians so vilified for this, is the fact that it posits the development of money as a spontaneous market process rather than something that has to be done through the dictates of government, which is effectively what the mainstream story that you get taught at university says. It says you get money because government gives you money. And if we didn't have government money, we'd all be slinging our feces at each other, unable to trade or unable to be civilized.
Exactly right. Oh, wow. Well, excellent points there. You know, money is a store of value, medium of exchange, and should be saleable. All important points. Now, in your books, you talk about the most successful forms of money: scarce, durable, divisible, portable, fungible, recognizable. So what I'd like you to please tell us the key differences in how you define sound money, hard money. I know you talk about gold. So please give us a sliding scale of hardest to, I guess fiat is the other end over there.
Yeah, so the concept of hard money refers to the difficulty of producing more of the money. So the most common place you would hear this term would be in a country that has a terrible currency, and where people would refer to their local terrible currency, say the Venezuelan bolivar or the Lebanese lira or the Turkish lira, or, we could go on and on and on. There's so many of these terrible currencies around the world. Well, there's the local, the Argentinian currency, and then there's the dollar, the hard currency. And the two are very different. So a lot of people in these places, I'd say, the highly paid people, the people who have who are highly skilled in their jobs and can demand to get paid in their choice, they generally choose to get paid in the hard currency. And the reason for that, and everybody understands in that context, they understand the difference. The local central bank is printing an enormous amount of the local currency, so that's easy money, that's the easy currency. Every year they make 20, 30, 40, 50% more because they just keep printing. And then the hard currency is something that nobody around you can print. The US dollar is being printed around maybe 7% per year. So when you compare 30% to 7%, obviously the US dollar is doing much better. It's a lot harder. So a lot of people dump their local money for the harder currency. But what Bitcoin is doing is that it's bringing that dynamic back. But what it is doing is that it makes the dollar look like the Argentinian peso, basically. That's really the key thing, because Bitcoin's supply only grows at currently around 1.7% per year, which is the lowest that we've had for a money ever. So in my book, The Bitcoin Standard, I argue that the reason that gold became money historically is because it has the lowest supply growth rate. And we have data on gold that goes back quite a while. And you see that gold increases at around 1.5% to 2% per year, always. So every year we get a little bit better at making more gold. So we find more gold every year, but we keep adding the new gold produced keeps added to the stockpiles of the existing gold. And so the existing gold keeps getting bigger. And so even though annual production is higher, the stockpile to which we're adding to is also a little bit higher. And so the annual growth rate continues to be roughly at the same level of around 1.5% to 2% per year. And so that was what made gold money, because it has the lowest supply growth rate of everything. Gold is the hardest money ever. And you see that dynamic, as I was saying earlier, within government currency. So even after you remove gold as money and governments replace it with their own currency, the same dynamic perpetuates throughout the 20th century across the world, where we see the easier money getting destroyed in favor of the harder monies. And now Bitcoin is back, offering us a new form of gold, effectively, that is even better than gold, because the supply growth rate drops by half every 4 years. So currently it's at around 1.7%. So it's very close in the range of what gold experiences. But starting next year, it's going to drop by half again. So it's going to drop to around 0.8 to 0.9%. At which point it's going to be significantly lower in terms of its supply growth rate than gold. And so at that point, it's going to be the hardest money that humanity has ever had, which, for me is kind of a big deal. So I think this is enormously significant, because as I was saying, whatever is the hardest to make is what ends up being used as money. This is almost like a golden rule that you see all throughout history. Whatever is the hardest to make is what gets used as money. And so we're seeing the world adjust to Bitcoin becoming money, because we can use Bitcoin. And where it differs from gold is that you cannot have gold-based monetary system without the acceptance and permission of national governments. They need to sign off on it because that physical gold has to be centralized in order for it to clear internationally. Whereas Bitcoin can perform all of its international clearance without having to go through centralized government-run agencies. So it can allow us to have a free market in money without government permission. That's really why it's so unique. And that's why it's better than Bitcoin. That's why Bitcoin is better than gold. So first, it has a lower, starting next year, it's going to have a lower supply growth rate. But secondly, and more importantly, it's much faster and cheaper to move around the world, so we can have a free market in the clearance and settlement of gold around the world without having to rely on centralized entities managed and controlled by governments and central banks.
Excellent points. As actually my next question was, please compare gold with Bitcoin, but you did an excellent job of that. And that's a key point. A lot of our listeners here, and many people who aren't as understanding of Bitcoin, see gold as a way to combat inflation or stagflation. And it is hard money, but when you enter Bitcoin, being the hardest ever invented, and it's pretty amazing. And the key concept, like you said, decentralized. Gold is still centralized and must be accepted. It's the physical property of gold. And so that's a key point right there. And you talk about the supply growth. And as we all know, when you increase the supply of something, the value comes down. It's basic economics, supply and demand. Is at the heart of it. And, you talk about the US dollar, it's increasing at a 7% rate, while you have Zimbabwe, Venezuela, Argentina, all these other currencies that are much less desirable. Would you say that the US dollar is, it's currently the global reserve currency? What do you foresee from your view for the future, whether, short-term or long-term, whatever view you want to take, for the dollar to remain the global reserve currency with fiat, and then Bitcoin being global reserve currency? Do you think it's going to surpass the dollar, or do you think Bitcoin will be global reserve asset?
I don't think you can separate the two. My honest opinion is that what ends up being the currency is the thing that has the largest amount of cash balances. So this is really, I think, how you thread the two together, and why I don't think you could separate this. A lot of people think that maybe we could just have Bitcoin as an asset while we can have money and currency as being the dollar. I think perhaps that is sustainable for a while. It can continue to run as long as Bitcoin is continuing to grow from a small place. But eventually, ultimately, the reason that you pay in a currency is not because the government says this is the currency. It's because ultimately that's the thing that in which people have the majority of their cash balances. So the global fiat system has an enormous starting advantage in that, because the governments and their banks and their central banks, they have the vast majority of humanity's wealth stored there because they have a monopoly. You can't go outside it. There is no alternative. So you have to keep your money there in their banking system with their currency for them to be able to basically pillage it on demand. But that system now has competition. Now we have Bitcoin as an alternative where you are able to hold the money outside. And so now, as people's cash balances in Bitcoin increase, they become more and more likely to conduct business trades and purchases using Bitcoin. And so this is not sustainable for me, the idea that we could just have Bitcoin as an asset that people hold in their portfolio, but it won't develop into a currency. Because if it continues to appreciate and the other asset, the dollar, continues to depreciate, well, people are going to hold a lot less dollars eventually over time, and they're going to hold a lot more Bitcoin. And eventually there's going to inevitably be a tipping point. And at that point, any two people transacting they are more likely to both have larger balances in Bitcoin than in dollars. So they're more likely to denominate their transaction in Bitcoin. So I don't see this as being a stable situation where we have one being used as a currency and the other one being used as an asset, because eventually, you look at the example of, again, hyperinflation. Look at places like Venezuela or Lebanon. So, people know Gresham's law says that bad money drives out good money from circulation. And in a sense, it's true, of course, that, yeah, so all of the things that you have to pay in the local currency, you're going to pay in the local currency because the local currency is constantly declining in value. So you want to be making the payments in that. So you buy the local currency and you make the payment with it. Because if the government is issuing a fake exchange rate, then if you wanted to pay with the foreign currency, the hard currency, things are going to be more expensive for you. So yes, everybody indeed does use the local currency, and that drives out the hard currency. So people just sit on their dollars. But people somehow think that this just means, this is it. And then this is the harder currency has been killed because of the easier currency being spent. And it's the exact opposite. What ends up happening is that the easier currency is spent to oblivion, and the value of cash balances in it go to zero. And the hard currency accumulates more and more cash balances. And eventually, the economy de facto goes on the harder currency standard because people start using that as money because it is the thing in which most cash balances are held. And eventually, people don't want to accept the inferior money. So that's why, the US dollar has been driven out by the Venezuelan bolivar, by the Zimbabwe dollar, by the Lebanese lira, by the Argentinian peso. The US dollar has been driven out, but realistically, these countries are all essentially dollarized, and the economy still runs on dollars, and everybody who has money in the country has dollars. And people who transact in serious amounts for serious business use dollars. So that's why I think this is not quite sustainable. I think the market for money is a winner-take-all brutal competition, and Bitcoin is not taking any prisoners.
Wow. Yes. Well, these are excellent points. In your book, you talk about how fiat is dead, economic slavery, and you use that word, unsustainable. And, how it just relies on the perpetual growth of debt and consumption. So do you, Dr. Ammous, foresee fiat eventually collapsing?
I don't know. In the Fiat Standard, in the book, I make the case for why it won't collapse. And I think most people just assume it's going to have to collapse. But I make the case for why I think it doesn't necessarily have to collapse. In fact, Bitcoin might be the reason that it does not collapse. And the reason for that is that, remember what I was saying earlier, that fiat is mined every time new debt is created. And everybody needs to create new debt because you can't just hold fiat. You can't hold savings. You have to get into debt. Well, with Bitcoin coming around, things are a little bit different. Now you don't have to get into debt and you just hold Bitcoin. So you don't hold dollars. You don't get into dollar debt. You hold Bitcoin instead. So if this is the case, if people start using Bitcoin as their saving asset, if cash balances in Bitcoin continue to grow, then that means that the amount of cash balances that are being held in fiat decline, and the amount of debt that is being created in fiat also declines, which means that the creation of more fiat also declines. So in other words, if more people hold Bitcoin, then yes, that will likely take away from the dollar demand because they're going to be holding Bitcoin instead of holding dollars. But more significant than that is that it's going to take away from the force of the dollar's supply, from the creation of the dollars, from the dollar supply. So it's going to reduce dollar demand and reduce dollar supply. And it's going to reduce dollar supply because fewer people are going to want to generate debt and get into debt. And so that means less fiat creation takes place. So less fiat is created, less demand for fiat. That is a formula not for hyperinflation, because the only way you get hyperinflation is if you get an enormous increase in the supply of money. So instead, if what the rise of Bitcoin does is that it reduces the creation of money, reduces the increase in the supply of money, well, then we don't necessarily have a hyperinflationary scenario. And I think this is kind of my, my very optimistic way in which Bitcoin rises, which is that it's just like an upgrade to the global monetary system, where we just, anybody at any point in time where you finally get this, then you just go and you get rid of your typewriter and you get a laptop. Effectively, the monetary equivalent, which is you get rid of your debt-based system where you need to always be getting into more and more debt, and you substitute an upgrade into a hard money-based system where you just continue to accumulate more and more hard money. And the sooner you start, the better it is. And that's not necessarily catastrophic for anybody, I think, because the vast majority of people who hold fiat are, they don't hold large quantities of fiat. Very few people save in fiat. So when you continue to destroy the value of fiat over time, you're destroying the value of people's debts. You're not destroying the value of people's savings. And so, and you know, if you have savings in fiat, you've already been getting destroyed for the past 60 years.
Mm-hmm.
You weren't going to not get destroyed anyway. But I think what happens is now that there's a way out, and so people can exit and they can continue to have a functioning monetary system as they exit the burning ship of the dollar. But it doesn't even have to be a burning ship. It can just be, a disassembling ship. We just take it apart slowly, one bit at a time.
I love that. Very positive. You know, it's like a change. I like how you just take it apart instead of it just collapsing and dooms and everything, how people talk about. It's very positive. It's like Bitcoin is like a healthy solution to the monetary system. And, you know, it reduces that debt of fiat and our dependency on that. And, you know, I love those points. I sort of want to know your mindset. What type of timeline do you foresee with all your vast experiences? What do you see being a catalyst for Bitcoin, you know, gaining on the fiat currency and becoming a global reserve currency and reducing our dependence on fiat? And, you know, and how does it affect the global monetary system with the role of these central banks? How, like, what is the catalyst?
I mean, honestly, it's difficult to say when we're going to get some kind of a massive tipping point. But I think the really important thing is that, to paraphrase John Lennon, fiat is over if you want it to be. So as far as I'm concerned, that's already happened. I've upgraded away from my central bank's currency, and I'm using Bitcoin, and that's it. You know, there was when I was living in Lebanon when the hyperinflation began, and I was completely unaffected by the hyperinflation because I have Bitcoin. I mean, I was affected because of my my fiat jobs retirement account basically was affected by it, but you know, that wasn't a massive problem for me because I have Bitcoin. So on an individual level, Bitcoin already works, and it doesn't need the entire world to adopt it for it to work for you. So if you could be the only person in your country or your town to be using Bitcoin, and it'll still save you from the hyperinflation that you would have to be dealing with otherwise. So that's the encouraging thing. And then, honestly, beyond that, I think that there's a kind of zen that I arrive at, which is that if you don't think Bitcoin is valuable for you, if you don't think Bitcoin helps solve a problem for you, then who am I to disagree with your judgment of your own life? Enjoy what you're doing. Keep doing what you're doing. Maybe inflation is good for you. Maybe you're better off continuing to enjoy the fruits of inflation. But if you get sick of it, then you're going to get Bitcoin. Then it's going to click for you.
Very nice. Thank you. Now, regarding asset allocation, how does Bitcoin, just your idea, how would Bitcoin fit into a overall asset allocation? Some people talk about, I like to have diversification. So I want to hold some gold and have some money in real estate, have some in Bitcoin. Are you a fan of that? Or do you think that Bitcoin is something that should be a larger portion of someone's asset allocation?
I think Bitcoin really shakes up the entire framework of asset allocation, because everything that we learned about asset allocation in the last 50 years or so has been, or even 100 years or so, has been heavily influenced by the fact that our money is broken. And so we are dealing with a broken form of money. And so it doesn't function well as money. And because it doesn't function well as money, we are having to deal with a variety of substitutes that are imperfect in their own ways, but they complement each other. And together they can play the role of money that we would ideally want to have performed by one liquid asset. So effectively, the 20th century has been a giant leap backward in monetary technology compared to the 19th century. In the 19th century, everybody in the world used gold as money. So you got paid in gold, and then you saved in gold, and you knew that your savings would appreciate over time slightly, and you knew that nobody could print gold to take away your savings. And so that gave everybody an enormous amount of certainty. Now, once you've accumulated a certain amount of savings, and then once you have the tolerance for taking on risk, that's when you're willing to take on the risk of basically investing in businesses, equity risk. And then, if you have significant resources, you could consider taking on different kinds of, early stage investing and angel investing, and these kind of long shot, high reward, high payoff gambles, effectively. So this is how I would expect a functioning monetary system to make the problem of asset allocation. It's pretty straightforward, because for the majority of people, it's just about accumulate the money. And if the money works, then you don't have to worry about anything else until you get to a specific or a significant chunk of money that you own. Then you can start investing in capital. And then you can start thinking about where you want to invest. You can invest in your own business, you can invest in other business, you can hire others to manage the investment for you. So now, because we don't have the money that works, we have to make do with alternatives. So what do? Well, you have some cash in a checking account, and you have a little bit of cash in a saving account, but then you hold a lot more money in things like government bonds. This is your cash alternative. And you also hold a little bit of gold. And you hold cash, you hold government bonds because they pay you a yield that helps you beat the inflation, or you think helps you beat the inflation. If you listen to government statistics, sometimes, it does. But now, even by government statistics, it doesn't beat inflation. So good luck on that. So you hold on to government yields, the government bonds. And the idea here is that you have the least risk. And so that functions like cash. And so now your cash balance is distributed between these things. And of course, and then another one that people use as an alternative to a checking account or to a saving account is housing. People think of their house as an investment, when really a house is a consumer good. Mm-hmm. So I don't think housing should be part of your asset allocation any more than your washing machine or your laptop. These are just durable consumer goods, or your car. So it's not an investment. You're not buying the car in order to appreciate, or the house, and your house is not appreciating. Your money is broken. Your house is not appreciating because your house requires significant running costs. And so if you take out the inflation and you calculate running costs, the house, is usually not appreciating. So I think in a world in which we have Bitcoin, you buy the house that you can afford and the house that you want to live in. You don't buy a house because it's the smart thing to do financially. You don't think of it as a financial decision wherein, hey, you know, I could get low interest rates on a loan, on a housing loan. It would be stupid not to take advantage of it in a fiat world because you get preferred credit. And so you put a significant chunk of your wealth in a house, and that helps you. It functions like a kind of saving account for the future. And it's, you know, it beats an actual saving account in fiat usually. And so you get rid of that. You get rid of the need for holding on to government bonds because that's a silly scam. And they can't beat inflation, and you know you're financing governments doing horrible things to the world. So you get rid of that. So you hold on to the money itself in terms of the money that you hold, which is hard, which is Bitcoin. And then investment comes as a on an I would say in this kind of world it would come on a as need basis. In other words, you're not out there looking for investments. The money's not burning a hole in your pocket with you trying to find somebody you can invest the money in. You don't go and read city fiat lifestyle magazines like The Economist in order to get ideas of where to put your money. But you know, you come across an opportunity to invest in your own work. Let's say you work at a business, you've been working there since you've been young, you've worked for 10 years, you've accumulated good savings. Now you know the business really well. You know, you take your savings that you've accumulated over 10 years, which have appreciated over those 10 years. You know, the stuff that you saved 10 years ago is now worth maybe 10, 20, 30, maybe 50% more. So your savings have appreciated. Now you can go and you can take half of your savings and build your own business and, you know, make your own business after having learned that job in 10 years. Or you know a friend who's got a great business idea and you like the idea, so you invest with them. So I'd say, you know, you would be much more selective and you would only invest in high quality enterprises, because you don't have to just spray and pray, as they say in modern markets, wherein you need to put your money on a chip in the casino, because otherwise you're losing anyway. You have to take your money through the fiat casino, or otherwise you're going to be lost. You're going to be losing the value on it.
Excellent points. You know, you mentioned quality over quantity. It's like we have this incessant quest to keep growing. We have to keep working. We're like working ourselves to death in order to stop from losing all this value. And, you know, it's with the Bitcoin standard, it's like we can go back to being creators, doing what we love, and not being forced to have to incessantly read, like you said, The Economist, to find new ways to just keep growing our money, because otherwise we're just losing. So excellent points there. It's a whole thinking. It's not just, you know, about, oh, this money has inflation. It's not as simple as that. It's this our whole quest, our whole thinking and lifestyle. And, you know, you mentioned how fiat affects food. And I want to talk about your thoughts about the economic decisions of food producers and consumers, how they're all about that whole short-term profits for long-term, you know, beneficial nutrients, and how they're actually depleting the soil for these profits in the short term. Could you tell us about that?
Yeah, so in the Fiat Standard, I have a whole chapter called Fiat Food. And I argue, I think, you know, the messing with the money has very far-reaching implications, because money is one half of every transaction out there in society. And so when the money is losing value, that's going to have very significant consequences. The Keynesian scam is the idea to try and get you to believe that you can just mess with the money and that there will be no costs to it. You know, you can make a free lunch. You can just have the government print a bunch of money, and then we can finance investment, we can finance consumption, we can eat our seed corn, and we can grow it as well. We can grow all the corn that we want to grow, and we can eat all the corn that we want to eat, and we don't have to choose. We don't have to prioritize. And that, I think, is false. And there is a cost. And what I do in this book is I try and explore the cost. So the cost comes in two ways. On the one hand, you are losing your savings, so that's destroying your ability to provide for yourself. And then on the other hand, the government is gaining more money, and so it has more and more power to shape your reality in the way that it pleases. And so this is reflected in A, they're constantly trying to tell you that inflation is good for you, and B, they're constantly trying to hide the inflation from you. And one very effective way that they have found for hiding the inflation, which I think is enormously consequential to human health, is that they have basically concocted a bunch of garbage in modern nutrition science, whose only point is to tell you that all of these necessary, essential things that your ancestors have eaten for thousands of generations, they are actually bad for you because the science has decided that they're bad for you. And instead, all of these new industrial concoctions that we can manufacture very cheaply, these are actually what's good for you. That's not anything profound about science. This is just inflation cope. And so I argue in the fiat food that what's happened is that the destruction of the currency has lowered people's living standards and has prevented them from being able to access the kind of high quality food that they had been used to. And so Americans today eat less red meat than they ate 100 years ago. And as a result of this, governments are, instead of, not creating the inflation that makes this a reality, they're out there trying to gaslight you into believing that meat is actually bad for you. Meat is going to destroy the planet because cow farts are going to burn the earth or something or the other. And meat is also going to destroy you because apparently all your ancestors were wrong to eat meat. They should have been eating, industrial canola, seed oils. But for me, it's very transparent how ridiculous these ideas are from the perspective of nutrition science. And I think you can only understand the very, very strong concerted effort to try and popularize those ideas by looking at the funding of those ideas in universities. And the funding comes from the people who benefit from the inflation. Essentially, governments are financing these curricula to tell people to continue to enjoy eating garbage. And that's how you hide the inflation. So I think you can't understand the enormous destruction of health that has happened over the last 50 years without reference to the collapse of the modern diet. And you can read that whole chapter for free on my website, saifedean.com/fiat food. It's a pretty elaborate argument. I can't really do it justice in a few minutes here, but
of course.
Read that chapter and see what you think of the whole thing, is what I'll say.
Absolutely. I love it. And your books are excellent. And, it's about questioning the predominant thinking. We need to be skeptics and we need to question things. And these studies, these research, you should always question who's funding this research. It's about control and controlling our thinking and our minds. And, I like to say that we live in a state of dilution of value. We just keep getting less output for every input across the board. And this food is a key example of that. And that's also contributing to the decline of our health. We have all these new diseases rising, and it is most likely linked to our food sources. So excellent reading, and I urge everyone to check that out. Bitcoin is not just a currency. It's also a platform for innovation and entrepreneurship. So there are plenty of new applications and services that were not possible before. Could you please tell us about a few of those?
Well, I think the most important one, and my favorite one, is the fact that it allows you to save. So we were discussing earlier how it changes asset management and asset allocation. And I think the real killer app here is the idea that you no longer need to be a part-time asset manager. This is the current situation in fiat, where everybody has to have a second job as an asset manager to keep the money that they made in their first job, which I think is insane. So Bitcoin frees you from that, in that you don't have to stay tuned to global markets and Federal Reserve's decisions, and the Japanese central bank and the Swiss central bank and commodity markets and geopolitics and who's started a war where and how's that going to affect your portfolio and how you should position for it. You turn off all of that and you just save in Bitcoin. You know that the fact that it is scarce means that in the long run, it's going to do better than all of the people who are actively managing themselves into an early grave with stress. So that for me would be the most impressive thing as an application of Bitcoin. It gives you your life back. You can just buy Bitcoin and live your life, play with your kids, talk to your wife, just enjoy being alive. Beyond that, I think also in terms of applications being built on Bitcoin, I think the Lightning Network is something very much worth looking into. And so if you're skeptical about Bitcoin's ability to handle growing numbers of people, Bitcoin's ability to scale, read about the Lightning Network. I'm sorry. If you're skeptical about Bitcoin's ability to scale and handle growing numbers of people, then read about the Lightning Network is what I would say.
Thank you so much. Bitcoin is the first form of money harder than gold, and it's so much more than money. We can finally have our life back, like you said. So thank you so much for taking the time to speak with us today and enlighten us. Could you please tell our audience how they can stay in touch with you and find out more about the Bitcoin Standard and all your courses?
Yeah, my website, saifedean.com. You can come on my website and take my online courses based around my books. And you can also follow me on Twitter, Saifedean I'm at Saifedean. And you can also follow my podcast, the Bitcoin Standard podcast. You can find it on YouTube, and you can also follow it wherever podcasts are followed around your neck of the woods. And I'll be offering a course based on Principles of Economics, my new book, starting in September. So do sign up for a membership in my website to be able to take the course.
Thank you so much, Dr. Ammous,
Cheers.
and to all the listeners.
Thank you very much. Have a good day.